I say a lot of things that make a lot of people unhappy. Bitcoin is just a vehicle for the US to sell more US treasuries through that ecosystem. And China is trying to get away from that, right? We're setting up like a commodity-based collateral system. China, Russia, India, South Africa, and the rest of them. They are planning to use physical gold as a tier one collateral for the repo, interbanking liquidity, and also the trade collateral as well. If gold goes to, let's say, $6,000, I can see silver going to $100. It's very possible.
Hi everybody and welcome back to Reinvent Money. Today I'm joined by Eric Yeung, known as King Kong 9888 on X, a man who has very interesting and outspoken takes on where the gold and silver markets are going. He's based in Hong Kong and provides a unique perspective also on what China and India are up to and how they are preparing for a post-dollar world order. Hi Eric, thanks for joining.
Thank you for having me on your show, Paul.
Yeah, for my viewers who are not yet familiar with you, could you tell me a bit more about your background and also why you want to be anonymous?
So, Paul, basically, I was in the contract manufacturing business for decades. I'm based out of Hong Kong, but I worked extensively in the Guangdong province, in the manufacturing town of Shenzhen, or the city of Shenzhen. And long story short, I got into gold after the GFC, the Great Financial Crisis, and I thought, hey, there's something wrong here. Why the heck is the system basically seizing up? And what's going on with all this QE, all this money printing that the US government is doing? So I started accumulating physical gold around 2009, 2010, around that time. I bought a bit of it. And then, of course, as you probably know, and your audience probably know, gold dropped from the high of $1,900 US dollars per troy ounce to around 1,100. So what I did is, when Donald Trump was in office for the first time, and he got Powell to pivot. I believe that was 2019. That's when I really backed up the truck and loaded up on both gold and silver. And I remember when I did that, the gold price was like at 1,200, to $1,300, and silver was at around $14 to $16. And of course, we all know what happened in 2020. Um, March of 2020, silver dropped to 1250 at the lowest, if I remember correctly. I loaded up as well during that time. So to your second question, why am I a King Kong? Right? Why don't I show
Yeah.
my face? Why don't I show people who I actually am? Like in reality. Well, number one, I own a lot of physical gold and silver. So it's a security measure. And number two, as you said during your introduction of me, I say a lot of things that make a lot of people unhappy. Let's put it that way. Like when I point out the truth of what's going on, like for example, recently I'm pointing out that a lot of small gold jewelry retailers in China, and also the middleman, okay, in China, distributing the physical gold to these people. And I pointed out that a lot of them have committed tax fraud for years, and they're still doing it right now. They're trying their luck right now with the Chinese tax authorities, even with the new tax laws. Okay? So they're trying it right now. And me pointing out what actually happened in the past and what's happening right now makes these people unhappy. I mean, it's obvious, right? They have the bag of tricks, and they want to keep everything secretive of what they did pre November 1st, 2025, and post November 1st, 2025, after the new VAT tax rules on gold in China. And Eric Yeung is coming out and telling everybody exactly what's going on, right? Of course, they don't like it. So, again, long story short, that's why I don't show my face to the
Yeah.
public.
So you're
Yeah,
pissing off a lot of people.
yeah,
Yeah.
that's
But
it.
Eric Young is your real name, right? That's but
Yes, yes,
like you told me
yes,
at the start before we started recording, there's a lot of Eric Youngs in Hong Kong, so it's that's not something people can easily identify you with.
correct. Yes,
Yeah,
that's it.
interesting. Well,
Yeah,
I'm only interested in your take on things. So I don't really care about how you look. So thanks a lot for being on my show, and let's dive into gold, silver, China, all of these things. Like last week, I talked to Jan Nieuwenhuis. I guess you also know his work, and we talked about how much gold China really owns, and he's been looking at customs data for years, and he came at a number, at least at the People's Bank of China owns of 5,300 tons, so much more than the IMF says that China has. It's around 2,300 tons.
yep.
Do you agree with Jan's figures when it comes to the People's Bank of China? Do they indeed own like 5,300 tons, more or less?
I think that's a very good estimation. I mean, conservative, right? Because how he came up with it, like you said, is from import data. But my friend Oriental Ghost, he's actually a you know well-known person on X, and he's tied with the SGE, the Shanghai Gold Exchange. So he knows what's going on over there at the Shanghai Gold Exchange, and also the gold market in China. He pointed out recently that the 2,300 metric tons of physical gold that the People's Bank of China owns, that's only the People's Bank of China. That's only China's central bank. But you got to remember, Paul, that China, I mean, like the country, China, the government of China, also owns a lot of Chinese commercial banks. So we call them state-owned commercial banks, like ICBC. That's the Industrial Commercial Bank of China, Bank of China, BOC, etc. I'm not going to name all of them. Okay, so they own these entities, and also a whole bunch of, for example, gold miners. Those are also state-owned. Okay, and commodity trading companies in China. And if we take all the physical gold that all these Chinese government entities own, it easily surpasses 5,000 metric tons. As a matter
Yeah.
of fact, there are numbers out there saying there's 20,000 metric tons. It might be. But that's why I said right off the bat, when you told me 5,000, I said, that's reasonable. That's something that most people can agree upon. 5,000 metric tons of physical gold that the Chinese government directly controls.
Yeah, interesting. And I also asked him that question, but I would like to hear from you too. Why is China, on the one hand, being so secretive about it by not reporting everything to the IMF, and also by, for example, spreading the holdings over all these different state entities? Why are they obfuscating things? What's the agenda behind that?
Well, Paul, it's simple, right? Let's say you're China, and your biggest customer for the last 30 years is the United States of America. You ship a lot of goods to the US and you make US dollars. So China, benefited from this relationship for the last 30 years. And what doesn't the US want to see? The US doesn't want to see anything that threatens the US dollar's supremacy or hegemony or whatever you call it, right? And what is physical gold? Not me saying it, but Paul Volcker actually said this. Gold is a currency or money that is even better than the US dollar. So in that sense, Paul, for the last 3 decades, China didn't want to, for lack of a better word, piss off Uncle Sam. That's why they didn't, announce to the world exactly how much physical gold it has direct control of.
Yeah, and also they would like to keep buying for relatively low prices. Of course, the price has been appreciating also as a result of China buying, but the more sort of they keep that under cover, the less rapidly the price rises. So they also benefit themselves by not being too outspoken about it.
I agree with that. So for the longest time, when the US and the what I call the Western banking cartel suppressed the price of gold and silver, China benefited. China bought a lot of physical gold on the cheap, below $1,500 for the longest time. So yes, I agree that China benefited by not announcing to the world how much physical gold that it in fact had.
And how about this price manipulation? I've been also in the gold business for a long time. I also started buying and I got interested in gold after the great financial crisis. So a bit of a same journey as you have been having. And I also learned a lot about GATA's work, the Gold Antitrust Action Committee, and I learned a lot about the London gold pool in the 60s and how the US and the West desperately tried to lower and control the gold price because it was the canary in the coal mine, of course. There was the barometer. At the same time, we've seen the gold price, of course, go up a lot, especially this year. Could you say or conclude that the gold price manipulation to the downside has stopped completely, or they're still trying to manipulate it down? For example, recently we had, of course, the gold price correction. Was that another act of manipulation, or what's your take on the whole manipulation story, given current conditions?
Well, we came to the right guy because I'm the guy who told everybody how the systematic manipulation of the gold and silver price works. In the West, what do you have? You have the LBMA, which is the London Bullion Market Association, and then you have the COMEX in New York, and you have the ETFs. The ETFs are the exchange traded funds of gold and silver, right? So we're talking about gold now. So you have the ETFs. But how, do these entities work together to manipulate the price of gold and silver? Well, you have these three places, they all have physical gold and silver. And these three places all have pricing mechanisms where they can, price the either the paper contract or the physical commodity of gold and silver. So what they did for the longest time, Paul, is that whenever, let's say, they short physical gold and silver, or paper gold and silver, sorry, on the COMEX, they would long an equivalent amount of gold and silver at the LBMA. So they're shorting. So people, Ted Buffler, they complain. They say, "Oh, 9:30 in the morning, all of a sudden, somebody, some bullion bank, shorted an entire year's worth of physical silver supply in a series of short positions at the COMEX," and they get frustrated, right? And then when you talk to people like Robert Garlip, who is a ex, JP Morgan bullion banker executive over there, Rob, what does he say? Well, Ted, or whoever is saying, it's not fair because there's a huge short position, paper short position at the COMEX. He would explain that the same amount of longs are being bought by these bullion banks at the LBMA. Now, the problem is the LBMA is not an exchange where everything is transparent. So, these LBMA contracts are bilateral, meaning that they're private between the buyer and the seller. Now, when I tell
Mhm.
you that, Paul, what do you like? Do you see the problem there? You have the COMEX where you can jack up your short positions, and then you're offsetting it at the LBMA with promissory notes, bilateral contracts that, according to David Jensen, or even Robert Goddard, okay? I mean, he inadvertently admitted it, um, is 100 to 1 in terms of paper to physical, okay, at the LBMA. So what do you have? You effectively have a system of suppression that go across the two places. And then when that's not enough, when they need metal to salvage or save their short positions, they pull metal out of the ETFs. That's what Jeff Curry said, right? When on I think CNBC a couple years ago. When people were talking to him, asking him what's with the ETFs, he said the ETFs are the shorts. That's what he meant by that. Okay? These
Yeah.
metal can be taken out to suppress the price. Sorry, go ahead. Yeah.
But then I wonder, like countries such as China, but also India, who both want to accumulate a gold and silver, for them, this is just one big bonanza because they can buy on the cheap at COMEX, ask for delivery, and basically drain COMEX in that way.
Yeah, you're absolutely correct, Paul. That's why, to answer your second question, that's why the price rose in the last 2.5 years, right? Why? And I explained this on my X account is because China, through the SGE, which is the Shanghai Gold Exchange, had a higher price for both gold and silver for the last 2.5 years than the Western, exchanges like the LBMA or the COMEX. So the only way that the West, the bankers of the West, can slow down, or they're not stopping it, slow down the drain, is to let the price go up, and that's what we saw.
Yeah, because
So you
otherwise
answer
they're
your
just
own
giving
question.
presents away to China and India, and why
It,
would
it,
the bankers be motivated to do that?
well, we're in a pretty, like they're in a pretty bad situation right now because my buddy on X, PM Buck, that's his name. Don't know his real name, but he has real good numbers in analyzing these things. He pointed out that right now, the global free float, Paul, for physical silver is only at 36.8 billion US dollars. That's the entire world's free floating silver across all exchanges. It's
Yeah, we're going to show a
$36.8
picture,
billion.
right? You have a chart here that I can.
Yes, I did give it to you.
Yeah,
Okay, so you can pull it up
I pull it up. Yeah,
for your audience. And that's a I guess that's a big problem, okay, for these bullion bankers, whoever is trying to suppress the price of silver, because as I explained to you, Paul, off camera, China right now has only 1,400 around, approximately, okay, a little bit above 1,400 metric tons of physical silver at the SGE, that's the Shanghai Gold Exchange, and the SHFE, that's the Shanghai Futures Exchange, vault. Okay, so that's all they have left. And every couple of days, they drain, but 100 metric tons leave the vault. So you can see that China is being drained. And then what happened at the LBMA in October? Right? Remember, Robert Goddard came out and said that there's no free float in London, right? And they had to get airplanes to ship silver from the COMEX to London. So now
right.
the situation eased a bit, but then look at the silver price; it's above 50 now again.
Yeah.
So it's not a good situation for them at
No.
all. Yeah.
And I always wondered, I understand why people wanted to suppress gold, not only in the 60s, but also in the years afterwards, because gold is money and it is a canary in a coal mine. But I've always wondered why there was also such a big interest to suppress silver prices and not any other commodity price, because there's so many critical minerals, materials, metals that arguably could also be shorted or manipulated in order to achieve a certain objective. So why this focus all these years on silver instead of other commodities?
I think the problem with silver for them is that we live in a high technology society. Everything uses silver for electromagnetic or electrical you know currents, conducting, whatever you call it. Basically, silver is a metal that has the most electrical conducting properties. Okay. And another fact that you might already know, Paul, is that silver is a byproduct mostly of mining things like copper. So pure silver mines are very rare, and they don't have that many of them around the world. And then thirdly, I think the reason why, to answer your question, why they're so interested in silver is because silver was once money. So some people tell me that if they lose control of silver, they're going to lose control of gold. That might be the reason why they take special interest in silver.
Interesting, yeah. And also because in certain countries, and especially India these days, silver is sort of assuming a monetary role again. And you've also wrote a lot about that. Could you say a bit more about the situation in India and how silver is arising there again as a sort of a monetary standard?
So the interesting thing with India, Paul, is that they recently announced that they're going to start allowing citizens to use physical silver as a collateral for liquidity. And I think that's significant because that, basically returns silver into the monetary, into basically a official monetary capacity. Okay. So you can store silver at the bank, or like lend it to the bank, and the bank would give you liquidity for that silver, fiat money liquidity. Now, the BRICS countries like China, Russia, India, South Africa, and the rest of them, they are planning to use physical gold as a tier one collateral for the repo, interbanking liquidity, and also the trade collateral as well. I think that is in process of being set up in Hong Kong and potentially Saudi Arabia as well. I don't know if you heard.
Yep.
The Shanghai Gold Exchange set up a vault in Hong Kong back in June this year.
Yeah, correct.
So that's the gold part. But the silver part, I agree with you. India is attempting to do something similar for silver in India.
Yeah, it's interesting because if you sort of compete for a new monetary system, or you're basically setting yourself up for a new system, it makes sense for you to use the one commodity that you have plenty of. Because I could also argue, like, China didn't have much gold. US already had a lot of gold. So China could have also pivoted to another commodity or something else altogether. But I guess they chose gold because gold is universally seen as money. And like you mentioned before, also what Volker said, it's basically the only form of money. So I guess China had no choice then to go for gold. But India says now, look, we can also go for silver instead. So there's choices to be made when it comes to preparing for a new monetary collateral system.
I think, Paul, like they'll use both. And India is telling us that silver will have a role for some of these BRICS countries. So gold will, like you said yourself, will be the predominant collateral amongst these big BRICS countries. But I can see silver coming into the mix as well because some of these BRICS countries have a lot of silver. And like you said, they if they want to use physical silver as a collateral to unleash liquidity out of that collateral, I can see it happening.
Yeah, interesting. And China, of course, India, of course, is also hoarding a lot of gold. So they are betting on several horses at the same time. And India is also repatriating a lot of gold. So they'd like to store the gold on their soil. What do you think of that? Because it also makes sense to put it in locations where you can get liquidity on top of it, like the SGE or maybe London or Switzerland or whatever. But India has more than half of the gold stored at home. Are they then still able to make use of it in a liquid way, or are they going to set up maybe an exchange themselves?
I think eventually the SGE will set up an offshore vault at in India, and once they do that, India can like I said, unleash the liquidity generated from its gold collateral. It's that simple.
Yeah,
So I think eventually it's going to happen. But meanwhile, they can store some of the gold in Hong Kong. They don't need to store all of it. Maybe 10% in Hong Kong and use that as collateral for their energy trade with China and Russia. It's very possible.
yeah. And I also suggested last week when I talked to Jan Nieuwenhuis is that Western countries, such as the Netherlands, for example, should also consider maybe storing some gold at the SGE. He thought it was a crazy idea because of cultural differences. But I think in a new world order, and I'd like to get your take on it because you're based there.
Oh, yeah.
I think it makes sense for the West to start, rethinking our position and also to sort of uh, tune into that new system and to embrace the new world order.
It's not crazy at all, Paul. You're correct. It's absolutely normal. Hong Kong is a humongous international community. I mean, like a lot of my friends, French people from France, expats. So, and they work in the financial industry in Hong Kong. So I don't think it's at normal at all for like a European country to send some physical gold to the Shanghai Gold Exchange Hong Kong vault.
Right.
I see that not being like absolutely normal. And Hong Kong has a couple of advantages too, right? Because the Hong Kong dollar is not under any sort of capital controls, so it can move in and out of Hong Kong. And also, the Hong Kong dollar is pegged to the US dollar. So I'm hearing this, Paul, that when they fully launch this thing in Hong Kong, I'm talking about the Shanghai Gold Exchange gold contracts of Hong Kong. They're going to offer both RMB and the Hong Kong dollar contracts
Yeah.
for the gold, for the SGE gold. So that would be perfect for like a European country. You can go back and forth,
Yeah.
RMB and Hong Kong dollars in Hong Kong.
Yeah.
It's
No,
perfect.
it
Yeah,
makes sense to me. Yeah. By the way, my wife travels quite a bit, and she went to Hong Kong a few months ago. But then she also went to Shenzhen, to the other side of the pond, and she found Shenzhen so much more modern than Hong Kong. Hong Kong felt outdated to her. How do you see that?
I agree, 100%. Because Hong Kong had that British colonial infrastructure, and Shenzhen was built from the ground up. So, so Shenzhen is like a modern city because they keep, when new things come out, they pull down the old stuff and they build the new skyscrapers. That's probably what your wife saw, okay? And Hong Kong is more of like a, old ex-colonial, ex-British colonial city where they're trying to preserve a lot of the old stuff, which, by the way, Paul, is helping China right now because the reason why Hong Kong is going to work as a international gold hub is because of our common law. Okay, we operate, under a common law system that the British colonial government left behind. Okay, that is, work very seamlessly. Okay, with both Britain right now and also European countries. And like I said, we don't have any capital controls, so capital can move in and out. And the Shanghai Gold Exchange is going to be offering both RMB contracts and Hong Kong dollar contracts. So to me, I think everything is going to work from where I'm standing.
Yeah. Yeah, interesting.
Yes.
Maybe just to go back to the LBMA for a moment, because you also shared an interesting chart with me. I'll put it up right now, where you see the LBMA gold holdings over the past 13 years or so. But then it sort of seems quite stable-ish. Then, how can I, while looking at this chart, how can I see that LBMA is being drained if I look at this chart?
Okay. So at first glance, most people think that, oh, LBMA has a lot of gold. But if you have to look at you have to look at the breakdown. Okay. So we don't look at what they claim that they have, because a lot of it is stuff that they cannot, it's not free float, you see. We're interested in the actual free float gold that the LBMA has, which back in December of this year was zero. Okay. Why do I say that, Paul? Because I didn't say this. Bloomberg said this. The LBMA had to delay delivery of physical gold to T plus 60, 60 days after the contract was up for delivery. They delayed it for 60 days. So to me, that means they had no free float of physical gold. It's hand to mouth. Now, looking at this chart here, it does say that the LBMA has approximately 8,800 metric tons of physical gold. But if we
Right.
look at the breakdown, 4,000 tons of that is the Bank of England reserve holdings. So they can't touch that. That's the reserves of the Bank of England.
Yeah.
BOE other holdings is 1,000 metric tons. Who knows what the heck that is?
But
Maybe
the
like,
first one, the
yes,
Bank of England only holds a few hundred tons, right? So it's like what the Bank of England stores for other countries, for example.
yes. That's what we're looking at for
Right.
the
Yeah.
for the first and the second row, right?
Yeah.
Like the
Yeah.
5,000 tons is whatever the Bank of England is holding as reserves for themselves and other countries
Yeah.
that they
Like
can't
Holland, for
touch.
example. Yeah, we store there too,
Yes,
for example. Yeah.
exactly. So 5,000 tons of that, right? London ETF holdings, that's 2,500 tons. So that's all the GLDs. I don't know all the names, but like GLD is the big one, right?
Right.
The ETF has a vote with the LBMA. And then you have like other holdings, estimated free float of 1,000. See that pitiful
Yep.
1,170 tons of free. That's the maximum free floats that you can they can potentially have, which I don't think they even have. Okay, 1,000 tons. So that's why on many of the shows I go on, I say the LBMA probably has a pretty low free float of physical gold
Yeah. But
because of all the reasons.
1170 is
Yes.
still much more than zero. So that it seems like
Well,
that.
oh, right. I mean, if they had 1170 on hand back in February of this year, do you think they would have delayed it by 60 days to ship out whatever gold that they had?
Yeah. Good
To
point.
make it was a big fiasco, right? Like, when the reporters asked them why there was a delay, the CEO of the LBMA said that gold was heavy.
Yeah, I remember that
Come on, come
that's a
on,
PR failure.
right?
But like
Yeah,
I mean, I
yeah,
work in this industry as well, and it is true that when it's busy, for example, we sell gold in Holland, and we had to wait also a long time for like the popular 50, 20, and 100 gram bars, and also because there was just a lack of refining capacity in Switzerland, and a lack of machinery, a lack of staff, and I guess also at the Bank of England they did indeed lack also enough armored vehicles, enough people. Sometimes I also read that Bank of England people go on a strike. So some of these more ordained things also happen, of course, which add to delivery times.
Paul, at the end of the day, it's all relative. Why do I say that? Because London was earlier this year was shipping like 400 metric tons to the US almost on a monthly basis. Okay, so yeah, they had to go had in quotation marks, and they shipped it to the US. And in my opinion, when they ran out of that, or like you said, some people said that they ran out of the correct format. Okay, fine. They might have ran out of the correct format, and they needed to send the gold to
Switzerland first.
Switzerland for resmelting, right? So there's that story. Okay, I understand that, but the fact is, a lot of the gold went to the U.S., right?
Yeah.
So how much gold does London actually have at this point? Nobody knows. But we know that, just looking at the official figures, the maximum they can have is approximately 1,000 metric tons. And, I'm skeptical, but other people can be less skeptical, I guess.
Yeah. But
That's it.
it's very clear also to me that the bull market is very strong, because we only recently saw a price correction. And if I look at current prices, we're already going fast towards new record highs in this way. So there's just a huge demand still from all places, including China and India, for people to just own physical and not the paper version. So I'm quite bullish still. I wonder what your thoughts are, and how do you see the gold and silver market for 2026, and what are your price targets?
Well, I see the exact same thing you're seeing. I see that retail, investors are beginning to wake up and buy physical gold. I see that central banks are not stopping. I mean, as a matter of fact, the PBOC announced that they bought a whole bunch of gold in September. So that's not stopping. And then other countries, central banks also bought a lot of gold this year. So that is not slowing down. And to answer your question, what I see that we're going to retest 4,400 US dollars per troy ounce very soon. Maybe, possibly within 2025, in the next month and a half.
Yeah,
It
I
can
agree.
happen.
Yeah.
And then, like, let me just say one more thing, though, right? So for 2026, it's possible that we test $5,000, maybe 6,000. I'm being conservative here because Jamie Dimon, I don't know if you read his what he said. He said we can get up to $8,000 to $10,000
Wow, I
within
missed
a
that.
couple of
Wow,
years.
that's coming
Yeah,
from his mouth.
yeah, he said that.
Yeah.
So
And how about silver?
silver, I think $50 is unsustainable. I mean, we're seeing that right now. Like I said, they have like $36.8 billion worth of free float in the entire world. It's not sustainable. Okay, the only solution for the tightness of physical silver free float is for the price to go up. And what I see is, if gold goes to, let's say, $6,000, I can see silver going to $100. It's very possible. By the way, that's only like a 60-to-1 gold to silver ratio,
Right.
right?
Yeah.
So that's not
It's not.
unreasonable.
No.
I see that. I see silver going to 100. And even at 100, it's not me saying it, a lot of other experts are saying it. Are we going to see this situation being resolved? Because it takes time to build mines. It's not like a situation where you can flick your fingers and a mine get built within 12 months and produce a whole bunch of silver. It doesn't work like that. It takes years to develop these mines and get them operational.
Yeah, I agree. What I wonder though is gold is a very sterile asset. It's mostly used for monetary purposes. Well, silver has two faces. It's also very much so an industrial metal. The ideal form of money shouldn't that be more sterile, such as gold or perhaps even Bitcoin, something that is hardly used for other purposes than to store and transfer wealth?
I don't even think they're trying to use it for money, Paul. I think they're using the gold and silver, primarily gold, as a collateral to compete, or not really compete, but as a parallel system to the US Treasuries. You see what I'm saying? So
Yeah.
the BRICS is using gold as a tier one collateral, and then for liquidity, they're going to use their own national currencies. That's how the system is going to work. Okay? And silver, like I said, since a lot of these BRICS countries, a lot of these global south small countries have a lot of silver, it just makes sense for silver to be included as a potential collateral for this system. That's all this
Right.
is.
Yeah,
I mean,
and of
like,
course
it,
that's the nice thing
sorry.
with modern technology. You can easily have several types of collateral functioning or underpinning a whole bunch of different national currencies. It makes with current technology we can do these things easily without having to rely on one trade currency or one type of collateral.
Absolutely. And look at what's happening to the US debt market right now. It's blowing up. Like, I mean, Donald Trump is just announced that they want to, you know, elongate mortgages to 50 years. And then he said the same thing for car loans, up it to 15 years. I think just yesterday he said that.
Yeah,
So, I mean, gold and silver, you don't have counterparty risk, physical gold and silver. I'm talking about encumbered physical gold and silver. You have no counterparty risk. Whereas well, the predominant collateral right now is US Treasuries, and that's a debt. That's basically a debt collateral that has counterparty risk.
yeah. But for
That's
example,
what
if
this is.
you're if
Yeah,
you're Cambodia and storing your gold in China, because I read that Cambodia is going to store some gold in China, then you
correct.
run the counterparty risk that China decides not to give the gold. Something that Venezuela also had to experience with London. So if you're not storing it on your own soil, there's still, of course, a risk that it's not returned to you.
Well, that's why Paul, that gold is going to go to Hong Kong. That's why they're storing it in Shenzhen. The SGE vault in Shenzhen, which is, like you said, right across the pond from Hong Kong. And eventually, I believe that gold is going to be moved to Hong Kong, where, to a lot of these countries, and like I said, a lot of these expats, Hong Kong is neutral territory. Okay. In the
Yeah,
banking system, Hong Kong is offshore. So that would give them more assurances. But yes, it's still not in their own backyard. That's why I believe that eventually the SGE is going to set up offshore vaults in their own backyards. Like I said, India, you know, Saudi Arabia, potentially Singapore, right? Like these places, so that these foreign countries who are trading with China feel more comfortable
yeah,
with
I
their
agree.
gold.
Makes
Yeah.
sense. And China could learn from the mistakes of the West by being more transparent. If China would be more transparent about what they store for what entity, then perhaps people could also gain more trust and eventually start storing gold at the SG as well. Because LBMA is such a it's just shrouded in mysteries, and the same goes for COMEX or whatever is stored at the Federal Reserve Bank of New York. um, I think a new system should be more transparent in also in order to gain trust and to survive in the long run.
I agree. I agree.
Uh, in 2 weeks, I talked to Kathleen Tyson. By the way, I think she also very much is on your page when it comes to the use of national currencies in the future for trade, and then having gold, for example, as a savings account or as a collateral. Do you follow her work as well?
I do. I believe she's very brilliant. She used to work for the NY Fed, so she knows what she's talking about. I mean, I think she ran Clearstream and for the Fed as well.
Yeah.
So that, She knows she's the person to talk to in terms of like, collateral systems and how they operate.
Yeah. What kind of
Yeah.
question would you ask her if there would be one question that you want me to relate to her? What would it be?
Well, the question that I would ask her is that how quickly does she think this can roll out for the BRICS countries? Like in terms of using physical gold as a collateral offshore.
Yeah. Okay, I will
That's
do
that's
it.
my question. Yeah.
Yeah, thanks. Final question, I think, at least from my side, is I wonder how you look at Bitcoin in all of this, because we just concluded that countries such as China and India are aiming at gold and silver, perhaps. But would they not also be interested in using Bitcoin as a collateral to back up the new financial system?
No, because Bitcoin is a US dollar proxy, essentially, in my opinion. I mean, because China, they don't, essentially in China, Bitcoin is illegal. You can't legally convert your Bitcoin to fiat currency through the banks in China. Okay? That's number one. So it's not legal. It's not legal for Chinese citizens to trade Bitcoin in China. And the second thing is that I believe Bitcoin and also all these stablecoins. Bitcoin, uses a lot of stablecoins, correct? Like Tether.
Yeah,
What I mean by that is a lot of people would convert the US dollars to Tether, and then
yeah,
they would use the Tether to buy Bitcoin at the exchanges. I know there's P2P, peer-to-peer transactions in Bitcoin. Fine, right? But most of the transactions happen at the exchanges.
yeah,
And, I don't know if you follow Scott Bessent and what, when they explained how the stable coins buy US treasuries, well, that's
yeah,
happening. Like the stable coins are buying US treasuries. So in my opinion, Bitcoin is just a vehicle for the US to sell more US treasuries through that ecosystem. You see what I'm saying?
yeah.
And China is trying to get away from that, right? We're setting up like a commodity based, like you said, a commodity based collateral system. So I don't see, China, Russia, India getting into that. It's not
Right.
happening.
So
There's
would
two
you then see
parallel
sort of
systems.
two
Yeah.
systems living apart? On the one hand, you got a Western-based system that uses the dollar, stablecoins, Bitcoin. And on the other hand, you would have like a BRIC system based primarily on commodities. And then, if that's the case, what should a small Western nation such as Holland do? Because I don't want to be stuck in either one of them. Like I'd like to have optionality and as a trading nation be logged into both systems basically. So maybe that's as a final question. What's your take on that?
I think, like you said, a small nation like Holland makes sense to you know, have the fingers in both pots, so to speak, both in the commodity collateral system and also the U.S. Treasury collateral system. By the way, I don't think that they will allow Bitcoin to be a collateral in the US dollar system because that would compete with US treasuries. Okay. Bitcoin is simply a vehicle to suck more US dollar liquidity into the stablecoin ecosystem. It can recycle US dollars into US treasuries. So I think a small country like Holland should do both because the US is the biggest dog in the dog pound in the Western hemisphere, right? And in the East, you got to have some gold, primarily physical gold, to trade with these Eastern countries in the future, in my opinion.
Yeah, fascinating. It's very interesting to talk to you, Eric. I do hope we can do it again in the future. It was very enlightening. People can find more about you on X, right? That's your main conduit. Or is there anything, any other sites that people should check out to follow you?
Well, I'm on Red Note as well in China. The account is the same as the one on X. It's King Kong 9888.
Perfect. I'll put it in the show notes as well. Stick around for a little bit longer to finish the upload of your file. But thanks so much, Eric, for your insights. And yeah, stay safe and keep on exposing all the scammers there. And look forward to reading your insights in the future.
Okay, thank you very much, Paul. Very much appreciated.
Likewise.